welcome in, everybody. I'm Andrew McCord, and you're on Stockbusters at TaipanFinancialNews.com. Now, stop me if you've heard this one before, but there's trouble in the U.S. housing market again. The Department of Commerce reported on June 18th that housing starts in May had fallen 2.1% to a seasonally adjusted annual pace of 1.47 million. And although that number is actually slightly better than economists had predicted, don't pop the champagne just yet. It was expected that we'd see a decline to an annual rate of 1.46 million. So basically, we're talking the equivalent of losing the big game by only 40 points instead of 50. So in light of this dreary news, let's bring in Neil L. DeFalco, Senior Equity Analyst and Editor of Gresser, to talk about where we're heading and what stocks investors should be dropping in the wake of this declining housing market. Neil, thanks for joining us.
Thrilled to be here, Andrew.
So tell me, what's going on with the housing industry? Why isn't it picking back up?
Well, Andrew, it's a fairly simple example of a capitalist's best friend and sometimes, as we're seeing here, worst enemy, supply and demand. There's just way too much supply out there and not enough demand. With interest rates going up and the whole implosion of the subprime lending market, there has been a dramatic decrease in new home purchases. At the peak of the housing boom, home builders such as Ryland Group built a plethora of unclaimed houses, thinking the demand would still be there in 6 months and they would have no problem unloading these houses on the general public. Well, they were dead wrong. What happened is that interest rates went up and the average Joe Schmo could no longer get a $500,000 mortgage for 5%. Groups like Ryland were stuck with this terribly huge inventory of unsold homes. And if you're a home builder with this kind of massive inventory, the market's going to be heavily skewed against you.
Okay, so we're going to see a lot of houses sitting unsold for quite a while, but is there any hope for a turnaround in the foreseeable future? How do companies unload these huge inventory buildups?
Well, there's a teeny speck of light at the end of this long bearish tunnel, Andrew. Building permits were actually up 3% to 150 million in May, which is a good sign because it's a key indicator of builders' confidence. And that confidence was at a 9-year low this past April. However, builders are unlikely to increase construction until excess inventory is cleared up and sales start to pick up. Getting rid of the excess inventory is simple. As soon as builders accept the fact that the long, beautiful housing boom wave is finally broke, they're going to be forced to have to offer special rebates and incentives in order to sell these excess houses. Basically, they're going to have to substantially lower prices. Once that happens, sales will pick up.
So then, besides getting a great deal on a 3-bedroom, is there any way that the average investor can benefit fiscally in a depressed housing market?
Well, I'm glad you asked that. I mentioned a company earlier called Ryland Group. Ryland is a king of the ice cream, per se, in the housing and mortgage industries. They specialize in the sale and construction of single-family homes and are one of the key facilitators of American suburban sprawl. However, as of late, they're falling down a black hole more devastating than the one Alice fell down in Wonderland. Doesn't look too good.
Okay, I'm guessing they weren't chasing the white rabbit, so what seems to be the cause of Ryland's downward spiral?
Well, it's all fundamentals, Andrew. Ryland's third and fourth quarter 2006 earnings were down an average of 30%, and the first quarter 2007 earnings came in negative, actually missing estimates by 56%, reporting a measly negative 58 cents a share. Ryland hasn't reported negative earnings since the 1990s, and this could have very well been the knife that sliced the Achilles heel of this bullish beast. Moreover, Ryland's new home orders and unit backlogs are down 44% and 50% respectively. Analysts expect Ryland to sell about 12,000 homes this year, which is more than a 20% decline from 2006. The bottom line is that the stock is going to be living in the landfill for the remainder of 2007.
Well, you can't get much clearer than that. Ryland's giving off some pretty clear signs to stay away. But let me ask you this. I've heard of several different investment vehicles that can actually be very profitable in a crumbling market. Can you elaborate on any of these for us?
Sure can, Andrew. You can short sell a stock for one, which is actually where you sell a stock before you buy it. And there are also a number of option strategies that work beautifully in a declining or highly volatile market, such as straddles and strangles.
All right, Neil DeFalco, thanks for the information. We do appreciate it.
Always a good time.
If you would like more information from Neil on how to profit in declining markets using strategies like strangles and straddles, check out his newest article, Fundamental Failures and Permanent Losers, How to Make Money in the Mishmash. It is available on the Gresser website, which can be accessed through TaipanFinancialNews.com, or you can go directly to www.gresser.com. Thanks for joining us on Stockbusters. I'm Andrew McCord. Until next time, keep your portfolio safe.